Welcome back to Wall Street Confidential. Now, Cisco is reporting earnings on Wednesday evening, and ahead of that, we have a trade in the ActionAlertsPlus.com portfolio. Jim Cramer buying 100 shares of Cisco.
Right.
You like this before the earnings?
Look, the earnings are going to be awful, but that's why the stock went from 23 to 17. So unless they say, listen, business has fallen off a cliff, which is not John Chambers' style, I think he's acutely conscious of where the stock is, and I think he wants it higher. I also think that while there is disarray, look at EMC went from 9 to 11. Cisco is one of those companies that I think, if you go back over the last quarter, he had a lot of good things to say. And he said that the financial crisis had basically run its course. Now, that was obviously not that true versus what happened, but he's unlikely to say, look, I made a mistake, and it hasn't. I think what he's more likely to say is, look, we're seeing a turn in the Asian economies. They're beginning to pump out a lot of money. The Europeans are pumping out a lot of money. And historically, we've been a great cyclical play. I mean, you know, he knows how to play the game. The fact that, look, if the stock were 23, I wouldn't be sitting here saying this. The fact is the stock went as low as 17. I feel the same way, by the way, about Qualcomm. I mean, Qualcomm at 45, I wouldn't recommend it. But at 37, come on. Maybe it has 3 down and 10 up. Cisco seems to have a point down and 10 and 6 or 7 up. I love those situations. I really don't think that John Chambers is going to sit there and tell you how bad things are. I think that John Chambers is going to say, look, the future is bright. And that they are the only survivor. I mean, one of the things that people have to recognize is that all the other companies that do networking are just going to get killed here in a long-term siege of the economy. So Cisco seems very right to me. Now, Stephanie Link and I, who work on Action Alerts, I mean, we were going back and forth on this, and we also bought some Hewlett-Packard. That's another one that I feel is way oversold. Now, you'd say, well, Jim, why didn't you buy Hewlett-Packard at 31, 32? It was there in the blink of an eye. You couldn't move fast enough. But Cisco's been nicely moved to 17, so I think it's pretty good.
And we like that it has $20 billion in cash.
Yeah, yes. Now, understand, all of my ideas here are within the confines that we're in a maybe 8,000 to 10,000 trading range. When we get to 10,000, let's look at it again. But, you know, at 10,000, maybe Cisco's at 21, and the money would have been made. Worth thinking about.
All right, thanks very much, Jim Cramer. That again, aaplus.com. We have a great DVD, folks, the 2009 Money Making DVD. In case you missed our fabulous conference in October, you want to email conference@thestreet.com, your name and information. We'll get back to you and we'll get you that DVD.